I was thinking there were a lot more institutions that were lined up, ready to go. But it turns out that the reality is they weren't lined up. They don't understand it fully. They're confused by it. They're confused by the mainstream media. And, I know people at Bloomberg and CNBC that understand Bitcoin, but they're overwhelmed with people who don't. And so there's constant misinformation. There's constantly, now, let me make it clear. Bitcoin has been a very volatile asset for a long time. And so when you're an institutional investor and you look at that, you're like, wow, this is extraordinarily risky.
In an interview with podcaster Joe Burnett, renowned financial expert and investor James Lavish talked about market trends, institutional involvement in Bitcoin, and its adoption. James discussed his knowledge of Bitcoin's potential, drawing comparisons to gold and emphasizing the cryptocurrency's limited supply and increasing adoption. According to James Lavish, institutional investors will spearhead the next wave of Bitcoin adoption worldwide. He pointed out that acceptance has been slower than anticipated, even though Bitcoin ETFs have been approved. Lavish explained this by saying institutional investors were preoccupied with other investment options, such as artificial intelligence and language learning models. James listed further impediments to adoption, including institutional investors' ignorance and false information in the media. Furthermore, Lavish said negative narratives around Bitcoin, such as worries about energy use and connections to criminal activity, have increased career risk for institutional investors. Lavish is, however, optimistic about the possibility that institutional adoption could encourage additional expansion in the Bitcoin economy, despite these obstacles. Watch clips from the interview for further insights into James Lavish's conversation with Joe Burnett. Please like this video, subscribe to the channel, and turn on post notifications for more content. Enjoy the video.
What's going to be the next wave of global Bitcoin adoption?
Yeah, I mean, so as Bitcoin investors, adopters, we look at Bitcoin and we love to look at the 4-year cycle, because of the halving, and it's normal, and that's the right way to look at it. The only thing is we've only had a few of them, so the empirical evidence is very limited. There's not, but it's something to attach to, so that is important. The institutional adoption era, I think we're just now getting to the front door of that. So I admittedly was far more optimistic about institutional adoption as those ETFs were approved than I should have been. Even coming from that world and knowing this, and it's hard because when you study Bitcoin and Bitcoin, you understand, and you really understand the true inherent value of it. You can't even imagine that people don't see this.
Yeah.
You just can't even fathom it. But then you go to the grocery store, you go out to dinner with friends, and you realize nobody's thinking about this stuff.
Yeah.
Like nobody's thinking about, okay, so you would think institutional investors would be searching for that next thing, searching. Well, it happens to be that the ETFs were approved right after this huge wave of innovation in language learning models, and AI took off. All the investors this Bitcoin thing is growing. It's growing. It's getting more solid. It's getting more adoption, and you have some institutions that want to take advantage of that, bring it to their people, make fees off of that. You've got your Larry Finks and you've got your Fidelity, BlackRock, Fidelity. You've got Coinbase. They're looking to take advantage of that interest over here. But then all of a sudden, institutional investors went, "Oh, look, language learning models.
Yeah,
look at this, all this AI," and it's not wrong.
Yep,
it's not wrong. And I wouldn't say that that's the reason there hasn't been quick adoption. I would say the reason there hasn't been quick, because institutional investors should be looking at a lot of things, and really diving deep into a lot of things. I would say that the reason for this slow progress is that, okay, now we have the ETFs, but if you understand how institutional investors, how they will adopt a new asset class, man, it takes time. It takes time just for them to learn, for the portfolio manager himself or herself to learn what it really is, or an analyst that brings the portfolio manager, and the portfolio manager's got that, and then you've got to get the chief investment officer to adopt it. And so there's these barriers. Those barriers all came down with the ETF. Okay, so you would think, oh, they're all lined up, they're ready to go, which is what I was thinking. There were a lot more institutions that were lined up, ready to go. But it turns out that the reality is they weren't lined up. They don't understand it fully. They're confused by it. They're confused by the mainstream media. And, I know people at Bloomberg and CNBC that understand Bitcoin, but they're overwhelmed with people who don't. And so there's constant misinformation. There's constantly, you've had a lot of virtue signaling going on in companies over the last decade. Hopefully that's calming down now. But because of that, you hit with all of the negativity about Bitcoin mining and how it takes energy, and anything that is worth anything takes energy.
Yeah,
that's the natural law.
Yeah,
right. So, but it that prevented them from really digging. It was like, oh, we don't want to touch that. Then you've got Elizabeth Warren coming out there. It's the currency for drug dealers and human traffickers and evil people. And it's like, okay, well, I don't need. So the career risk has been very high for institutional investors.
According to James Lavish, despite professionals and colleagues cautioning him against it and branding it a Ponzi scheme with no intrinsic value, he contemplated investing in Bitcoin in 2018. According to him, many people still don't get Bitcoin and either think there's a better version out there or compare it to Dogecoin. As a reliable store of value in the face of inflationary pressures, Lavish contended that the value of Bitcoin is derived from its restricted supply and increasing ubiquity. With regard to Bitcoin, he distinguished two separate mindsets: that of the gambler, who looks for fast profits, and that of the increasing number of those who find a trustworthy store of value. Lavish stated that despite the first cautions, he had invested in Bitcoin and thought its acceptance and knowledge were expanding. He also emphasized how much Bitcoin's market capitalization differs from gold's. Let's go back to the interview and watch more clips to gain insights from James Lavish.
I was an institutional investor for 30 years.
Yeah.
And I know that I have peers who are like, what is he doing?
Yeah.
It's fine. And it doesn't bother me. It's good. It means I'm heading in the right direction.
Mm-hmm.
And so, I mean, my experience was even in 2018, I mean, I bumped up against Bitcoin a few times in 2018. I went to, I wanted to go out a little bit out on the risk curve. Now, let me make it clear. Bitcoin has been a very volatile asset for a long time. And so when you're an institutional investor and you look at that, you're like, wow, this is extraordinarily risky. That risk is decreasing as inversely, kind of as more money comes into Bitcoin, that risk is decreasing, that it's going to continue to be volatile. But anyway, I had some personal capital that I want to allocate. And I thought, well, I want to go out on the risk curve here. What's this Bitcoin thing?
Mm-hmm.
I think there's something there. And so I did as you normally do. I went around and asked my peers and the experts on the street, really the technology analysts and portfolio managers and hedge funds. And they're like, every single one of them was like, even if they said, I own a scrap, but I got it years ago, it's not worth anything. There's nothing there.
Yeah.
It's really just a Ponzi scheme. There's no inherent value, and it's going to go to zero likely. So I wouldn't do that. I was like, oh God, thank you so much for warning me off from buying Bitcoin when it was only like $3,000, $3,500. It was so helpful, but that's the attitude that you still see. People are like, 60,000 for a pet rock.
Yeah.
Why would you buy that? But it goes to your first statement, like they just don't understand it.
Mm-hmm.
They have no idea. They look at it and they say, well, there's no difference between this and Dogecoin. And the thing I always get, which is, well, why wouldn't somebody just make a new and better Bitcoin?
Everything's going up. Why should I buy Bitcoin?
Yeah. I think the answer there is, I think that everything will rise.
Yeah.
And Bitcoin will be part of that. And just remember, though, that Bitcoin is such a small asset. It's still only $1 trillion, right? So when you look at gold is up, depending on whether you include jewelry in there or not, people have jewelry that they consider investments they have in their safe,
Yeah.
But if you look at that, it's 15 trillion. So Bitcoin's tiny compared to gold still. And if you look at all the assets around the world, somewhere north of $800 trillion in investable assets. I mean, Bitcoin's just a fraction of a percentage of that. So there's two kind of mentalities that we're talking about. When you look at Bitcoin and think, okay, well, it's just another risk asset, like you're talking about. It's another GameStop. It's another, meme coin, whatever. It's just something else that I can gamble my money on because I'm trying to catch up. And that's one mentality. And we see it all the time. We see the gambler's mentality everywhere. I don't blame people. They feel like it's their last choice. Why do you think they go buy gas, they go in to get, a Diet Coke, and they go up the counter and like, oh, well, give me a couple lottery tickets. Yeah. Why do you think they do that? Because they think they're going to win the lottery? Well, because just the off chance that I win and then I can stop doing this grind, and I can get out. And so this little hope, and so that's one way to look at it. And it's been there. That's what Bitcoin has been for a long time to most people who are not true Bitcoiners. Yeah. But then you've got the other side, which is, oh my God, this money supply is inflating so rapidly. I need to put my money somewhere that I can trust it's not going to be inflated away, deflated. Yeah. Right. So, and that's the other camp. And I think that camp is growing. And as that camp grows and that understanding, those people, that it's kind of like a movement that people understand it.
Investors in Ethereum are keeping an eye on mPepe, an increasingly common cryptocurrency. mPepe is a unique investment opportunity since it is founded on the Ethereum blockchain and blends sophisticated financial services with meme culture. The cryptocurrency is positioned for significant growth by utilizing Ethereum's strong infrastructure, security, and scalability. mPepe's incorporation of DeFi components, like decentralized lending and yield farming, improves its usability and investment attractiveness. Ethereum backers understand that mPepe can significantly increase his riches by utilizing the advantages of the Ethereum blockchain. Because of its compatibility with Ethereum technology, mPepe is a strong competitor in the cryptocurrency market. mPepe offers Ethereum investors a fresh chance to make significant profits. The cryptocurrency is a potent investment vehicle because of its unique blend of superior DeFi capabilities and meme culture. By utilizing the current Ethereum infrastructure, mPepe can benefit from the advantages of one of the most well-established networks in the cryptocurrency industry. Due to mPepe's unique perspective on cryptocurrencies, Ethereum investors are increasingly interested in it. In cryptocurrencies, the application of DeFi protocols with strong Ethereum infrastructure offers a revolutionary possibility. mPepe is a great option for investors wishing to build significant and long-lasting riches because of its distinctive fusion of meme culture and cutting-edge financial services. Ethereum investors are taking notice of mPepe's ability to generate big returns as it continues to gain traction. As we conclude, what are your thoughts on this interview? As institutional investors begin to take notice of Bitcoin and other cryptocurrencies, what do you think will be the tipping point for mainstream adoption? And how will it impact the financial landscape of the world? Please drop your thoughts in the comments below, share this video, and hit your thumbs on the like button. Thanks for watching! Don't forget to subscribe.